Welcome to Passion for Property with me, Manni Chopra. And today's guest is none other than, wait for it, site labourer turned property developer, a multi-million pound property development owner, speaker, multiple award winner, heartthrob of the ladies. I've given that away, haven't I? The one and the only Mr. Jack Jiggens.
Hey Manny, how are we doing?
Hi, Jack.
Thank you for having me.
Thanks for coming along and, sparing your time on a Saturday sunny afternoon.
I've been on site this morning, so it's nice to get out of the site work this morning.
Brilliant. So before we start, do you want to tell us a little bit about life before property?
Yeah, well, I can't really remember life before property. I was actually born pretty much on site. So one of my earliest memories was my dad was building our family home and we were living in a static caravan in the garden. Bless my mum, 3 kids under the age of 5. And then pretty much as soon as we had finished that, he was willing to sell it on and keep going up the property ladder himself.
Wow. So is that like a recurring theme going on?
Yeah, every house I lived in growing up, he had built. He actually run a plant and tool hire company, so in construction. So all of our family friends. It's funny, my dad's got nicknames for everyone, so it's like Tony the carpet, Steve the bricklayer, or whatever it may be. But yeah, very much surrounded by that construction aspect. But one thing I never understood with all of my family is why they didn't own much real estate other than their own home. So
Right.
that's where I sort of carved my way to not only just work in construction, but also in property ownership as well.
Right. So what was obviously you had, like I said, no life before property because you were just born. Uh, but how did that inspire you? Because, it could go one of either ways. It could be like, I am not doing property ever in my life because it was quite probably in terms of like moving schools and all of that. Did that disrupt your sort of childhood in that way?
Yeah, we didn't really move around schools. I only went to 3 schools growing up, so we were always very local, which is in sort of South Oxfordshire. And I suppose I definitely was born and grew up with that like entrepreneurial spur. I was always wanting to trade stuff. Like definitely a trader personality where you get something low and sell high. But there was a short period where I wasn't actually in property. I was working in sales in an office, and I also had a small meal prep business that I was selling meals within the vicinity of the office. So every night I was going to Tesco's, collecting all the food, cooking it, bringing it in the next day, as well as the day job where I was earning commission in the sales role. So I had that sort of entrepreneurial, I suppose, spur, but then I just like what I know, and I knew construction. I kind of knew how to do pretty much everything in construction, which definitely helps because construction is a big piece of property or landlordship. And then, yeah, decided to do the various businesses that we've got running now in our ecosystem.
So back to your first project, if I can rejig your memory, what was your first project? How did it come about? And, what did you make of it?
So I quit my sales role on like the first week of January one year, and I was like, I want to move into property full time. And at the time where I sort of quit my office job, I wanted to get back to some form of work, and because my family environment, I went back to work with someone on site. So even though I've got a university degree, I was probably the most qualified hod carrier in the UK at that point, labouring on sites. And one of the first sites that we did, which you could call where I had sort of some equity or skin in the game, was we bought a set of garages in Henley-on-Thames, got planning to build a 3-bedroom house, built a 3-bedroom house and sold it. And we bought the garages for about 40,000, sold the house at the end for 575. And that was like my first taste of
Money
doing a project.
and money. So you actually had like you put in the labor. That was your sweat equity.
Yes,
effectively.
Exactly that. The first project was sweat equity, and then the next project we did, I was co-investing with a family friend of ours who was a builder. And yeah, we then built the next project was a bungalow, which we knocked down and then built a 4-bedroom house.
So it was literally new build from scratch. You didn't have to mess about. Like, I'm not hanging around. I'm just going.
Yeah, I mean, we knew buildings. So,
Exactly.
and, back then I look at the planning process that we did, and I didn't have a clue what was going on there. We didn't work with banks, so I didn't know what leverage was or refurbishment facilities were. So it was literally just us, the other trades. So we'd have plumbers and electricians to sign off certificates. Maybe a structural engineer, but that's as far as it went. It was just us on the site, and we would be there for 9 months building, and that was that.
Well, that's really the sort of foundations of any property development business, right? If you know the trade, you've got massive advantage over someone like myself, possibly who doesn't have a construction background. So I think that put you already in, a step forward. So fast forward to now, that's probably presumably in your early 20s.
Yes, yeah, exactly, yeah.
So you did lots of new builds and
Yeah.
made some money, built up a cash pot, presumably.
Yeah, which is now gone.
Yeah, because you're a developer.
Yeah.
But so then fast forward to now, what does your business look like? What does your property world look like?
So I mean that, looking back, that's over 10 years ago. I still consider myself as fairly young, so I started really early. And when I was leaving that particular site that I mentioned, I was like, right, I want to do 5 of these a year and get off the tools, because being on site over winter, it's pretty depressing, quite frankly. And hats off to
People who
trades that do that.
Yeah.
And I obviously knew my capabilities were more than just moving materials around. There's a phrase on site where some people get paid below the shoulders and some people get paid above the shoulders, and I definitely knew that my sort of tenacity and intellect could take me a bit further than moving blocks from A to B. So at that point, I literally went across the property circuit, educating myself, signed up to courses, just became a little busy bee trying to essentially learn more about everything, all the facets of strategies, developments, the funding side of things. To build a development company was the end goal. And in that period, I actually took on a short-term project management contract where I was just getting paid per day to allow myself to go into networking events, learn off other people. And that's enabled us to set up the sort of ecosystem we have now. So across the sort of board, we run a development company, which is the main sort of focus of the business. So today we've got 5 live sites. That's 70 flats and houses, £32 million worth of value.
Just in those 5
Just
schemes,
in those
yeah?
5 schemes, yeah. And we've got a team of 9 that help us do that. So we've got a team that help us, manage those sites, find them, fund them, and deliver them. We then, Ben and I, who are my business partner, who I run the development company with, also set up a measured surveying business, which when it set out, we were our main client. But now 99% of our work is external clients, and we're really growing in that business. We've just done a £50,000 month, which is our biggest month to date.
That's amazing.
Which is great. Ben runs an architectural practice, and then I also run a HMO and lettings business with my brother that manages all of the blocks that we finish in our development company XP. So you can kind of see we've got an ecosystem of we can survey, we can design, we can develop, and we can retain, all within the same group. And across all the businesses, it's 30 staff. So so I suppose moving more from on-site to more business ownership, and actually I don't manage the projects in XP. Ben does all of that. But I do manage the projects in the HMO business.
Right. So this is this perfect, amazing ecosystem that you built up of property businesses, which kind of feed into each other and kind of not only just for your own self, but also for other developers like me who can use the survey businesses and all of that stuff. And then you haven't mentioned your training, because I think you've started a bit of that as well, right?
Yeah, so we, obviously we've scaled to take a business from a standstill in 7 years up to 32 million in delivery. There's a lot of learnings and mistakes and things that go right and things that go wrong. And also we were always investing in our own education. To even yesterday we were having a non-exec session with our non-exec advisor across the whole group. And then we just like to share and help others, because I always say to people, our 7th HMO is very different to our first one. So there's a lot of learnings that could be taken from that. And I believe that we've learned a lot of others and invested in to get to where we are. And there's a lot of giving back that we could help others get there quicker and make less mistakes, essentially.
Yeah. So let's just think about your structure, that you've got this property development arm where you're generally just not trading, but building to sell.
Yes.
Then you've got the HMO business, which is a hold business. You're holding it for long-term equity, and obviously since you're doing this in the southeast, then the properties will eventually go up, and that's going to be your monthly cash flow. So that's that other strand. And then you've got the cash flowing business, which is the XP service and all. It's kind of really great. But how did you just build up that? Did you just what was your first company that you set up, the property development?
So XP was the first company we set up. The projects in that business, we've grown the size of projects that we were doing. We knew that we kind of had this weird thing where a lot of people go into property from a different sector and they don't understand the construction side, and that is normally quite daunting. Along with the high raising capital for millions is quite a daunting factor. So from a confidence perspective, we started smaller. and we've been sort of growing every year to get to the point we are today. But one of our first projects was we bought an undercroft basement and converted that to 2 apartments. We actually crowd raised 100% of the costs, which was quite good fun. Developed those 2 out, and we're like, right, this makes sense. That was kind of a test case for Ben and I as sort of
Working together as well. Yeah.
and then, morals aligned, work ethics aligned. We enjoy working with each other. Right, let's make a real go of this. And that's when we started then growing and building out the team. And it's with development companies, I believe you only really make good capital and money when you stop growing. So we've been on this growth journey, and we're kind of now reaching a sort of maturity point where we're like, okay, we're comfortable delivering the size that we're delivering. It pays for the team. And then hopefully we can continue that sort of size that we're currently at.
Right. So in terms of then the design and construction company, they charge a discounted rate to XP development
They
company.
just charge market rate.
They do?
Yeah, so
All right.
we treat every business as a standalone business, because the team in XP Surveys might be working really hard to bring in new leads, do work. Why would we then do it at a cost for our development company when they could be surveying another site and making a profit? So we charge market rate for all of our intercompany services. Obviously, there's benefits. You don't necessarily have to pay for the survey and the planning before it goes in and things like that from a cash flow perspective. But they all sort of complement each other well. And we've also tried to ensure that there's no concentration risk with our businesses, so that if one of our businesses are a quiet year, another business doesn't get impacted by that. So we're always making sure that we've got enough business outside of our own group to sustain all of the business's growth.
Right. So it's a really unique model. I mean, in a sense, it's kind of makes complete sense to me. And having that in-house expertise in all these different areas is what I think sort of makes you stand out, or has that competitive edge for you guys, I think, as compared to maybe a standalone developer who's having to outsource a lot of this stuff to other planning and design companies, because they're not going to get priority over like their other,
Yeah.
10 clients or what have you. But you could prioritize. Not only can you not necessarily give a discount, but prioritize it, but also get it done,
Yeah.
things done quickly.
Yeah, so there's speed is one thing. So our surveyor knows our estate manager, and if they need to communicate, it's not going to an external company for quoting purposes. They just call each other. So there's speed. There's also control. You can't always rely on third-party companies to deliver to the performance that you want. And also, our company sort of morals and goals are shared with all the teams collectively in the same room every quarter. So they all know where we're going. They all know what they're up to. They all know what each other are up to. And that element of knowledge of the group really, really does help for ease of growth. Sometimes it's great to hear that people are connecting internally in the businesses without us even knowing. And whereas before they would have to come to me, then I'd have to go out. And, it's a lot more efficient that way as well.
So in the schemes that you're doing, the 5 schemes that you're currently going,
Yeah.
what would you say is the one that you've either enjoyed the most, or something that's been the best one of the 5 which is going really smoothly, all of that stuff? But which one is your favorite one right now on the scheme 5, and why?
Yeah, so 2 projects stand out, one for looks and one for money. And I kind of find a correlation: the better the scheme looks, the normally the worse money it makes. So my favourite scheme from a looks perspective is we bought a old maltings building in Abingdon in Oxfordshire. So it's about 10 minutes from Oxford. It's a 10,000 square foot building that was office, so we managed to get permitted development to convert it. Fortunately, it wasn't listed. It could have been, being an old maltings building, but it looks gorgeous. We're keeping a lot of exposed brickwork. It's got a big chimney turret that we're converting into a cool, funky HMO. And that's essentially 21 apartments and 2 houses in the car park. But yeah, cracking scheme. And then my favourite is the one that's financially performing the best, which is our scheme in Tame. It's a 17,000 square foot office building that we bought. Again, so we condensed and asset managed the commercial space, because it was part occupied, to one end of the building, re-geared the leases, up the rents, secured those on 15-year leases. And then we're then converting the rest of it to 20 apartments. And we're also going for planning for houses in the car park as well. But from a profitability perspective, that's not as a good looking building, but on a spreadsheet it looks better to you.
So you've got an office building. Part of it is income,
Yeah.
which is got the leases.
Offices, yeah.
already, which has been going since you bought it and you've kept it going.
Correct. Yes.
And then were you building above that? You're converting the ones
Yeah.
space?
So it's basically 6 offices that are almost like terrace houses.
Right.
And we had a tenant on one end and a tenant on another end. So we were convinced with the tenant on the far right end to move and sort of remove themselves from that wing. So then we have part office on the left-hand side and flats on the right-hand side.
Right. Oh, so it's just one
Yeah.
building is full, and that's sort of giving you a bit of cash flow throughout. And then they don't mind the construction going on in the rest of the side, presumably.
Well, they don't really have a choice.
Yeah. Yeah, but I mean, they're okay with it,
Yeah.
basically.
Yes. That part of the site's bringing in about 100 grand revenue in rent. We do a lot of phasing with our site. So we've actually already developed 9 of the 20 flats, which are on the market. I think 6 are sold now, and we're moving on to the next phase. That kind of keeps our capital costs down for finance by phasing it that way.
That's a really great idea. So how are you finding the market? Because you've got a lot of stock on the market
Yeah.
right now. How you find that market? Because there was this, research been done a few weeks ago where apartments are a lot harder to sell. They're also, from a value perspective, apartments are not getting as much as houses are. So what are you finding? Because yours are mainly office to residential schemes.
Yeah, so out of our 70 units, I would have probably guessed 60 are flats. Houses do sell better, that's inevitable. But flats do have a price. They have a price point. Normally, the reason that flats don't sell very well is because people like freeholds. They like owning a building that they don't have to worry about service charge or even the lease going down in years, which equals value.
And the communal areas managing all of that.
Yeah, exactly. And then you've got amenity and access. So a lot of people buy houses because they might not want to walk up a 3-story block of flats with their shopping. So we try and target those areas that normally have a pitfall in flats. So for example, our site in Tame, all of the apartments have amenity space. So they might have a front garden or a balcony garden. We also try and put lifts in where we can. So an elderly person downsizing can get a lift up to the top floor, no problem. And you have to price it right. Everything's worth something. It's just what price that falls at. So doing all of that hard work up front, making sure we've got our numbers right is really key. But they, the fundamentals are they don't sell as well as houses. But then we also do a long lease. We normally do a 250 or a 500-year lease.
Oh, you mean when you're selling them, you have that kind of, or do you do share of freehold as well
They
sometimes?
do share a freehold if it's a smaller site. So we've got a development site in Marlow in Buckinghamshire at the moment.
That's your third one.
Yeah, that's the third one. That's 8 homes, part flats, part sort of muse flats, and that will be a share of freehold because there's only 8 parties that need to manage that. When you've got 20 plus 2 commercial spaces plus houses, you don't really want them sharing anything. It's just very bit
Complicated.
Yeah.
Yeah. So those are your 3 projects, and you're saying it's kind of okay. The sales are doing pretty good. Nothing to
Yeah.
worrying about.
We've I know that the market is difficult. It's not an easy time to be selling at the moment. There's lack of confidence. Interest rates haven't gone down as sharply as people wanted them to. A lot of people have already moved during that COVID spurt. A lot of people thought, actually, life's too short. Let's move house. So the nature of that is you get this backlog of people that have already moved and not moving again. So there's less activity essentially. But in Tame we've sold most of our phase 1. In Marlow we've sold 5 of the apartments. In Abingdon we've already sold I think 5 off plan. So we really target sales really early. Abingdon won't be finished for 3 months. We've already got pre-agreed sales and deposits held. So we focus on sales really, really early because it's key.
What are your exit plan Bs and plan Cs in case some of them, like 2 or 3, like in any scheme doesn't sell? Because presumably that's the profit, right? Generally, every developer's profit is in the last few units to sell.
Yeah, of course. So we do hold stock as well. So we've held a lot of sites. We built a 7-office, 7-flat development in Reading. We've kept that. We built, converted and refurbished a block of 14 flats, which was an old mill building. That's now refinanced and income generating. So we're not afraid of holding stock in our portfolio. We're fortunate that most of the areas that we develop, the yields work from a refinance perspective, because obviously there's the stress test now against mortgage income. And also you've got to be making a 25% margin on GDV to not put money back in on the refinance. So the areas that we operate in, the values aren't, sky high, so we can refinance and hold them. We have done that before. One of our 5th development that we've got on the go at the moment is in Muswell Hill in London. And the exit values are around 9.5 £1,000 a square foot, you can't refinance those types of units. You just got to be really efficient at selling and pricing it correctly. But that's one of the 5. But the other 4, we could refinance all of the units if we needed to.
And possibly pay your investors back at the very least, and maybe just keep your equity in the deal
Exactly.
for longer.
Yeah, we actually have some investor partners that want to hold stock. So the block of 14 flats we kept with an investor. That was his preference. He put all the capital in to start. He got all of his capital back out, and now we own the asset together and share the income.
Oh, that's great. Actually, that brings me on quite nice to the next question, which is, you're doing a lot. Where's all the money coming from?
Yeah, so I mean, it's one of the most difficult parts of growing a development or a property business is like keeping that income in the trading entity that's delivering the projects. Projects as a standalone can be profitable, but if you're not feeding the engine that's finding them and structuring the finance and bringing in the investment, you essentially can't do more projects. So we do some self-funded, we do some with investors, we do either investment on just a loan basis or an equity basis. We're kind of led by the particular investor at that given time. Most of our investors are just high net worth, normal people that you could go to the pub with and have a beer and check in. And, they, I suppose, are rooting for us as young, hungry developers. They can get in as involved as they want to, but they don't need to do anything. We have investors that just say, come and check in with me in a year's time, and that's good enough. And we have others that want to see a lot more of the correspondence, but we kind of know what we're good at, and that's finding it and getting it delivered, and then they come in with the investment to help us along.
Well, the thing is, I think now it's kind of that easy flow for you, right? Because you don't have to prove anything. You've proven yourself. You've had multiple successful projects behind your belt. What sort of advice would you give to someone who's possibly maybe just been in property a couple of years, they've done a couple of projects, but now kind of thinking, I need some angel investors? What sort of any couple of tips you could give them to see how they can get investors?
Yeah, I'd have said the 2 hardest things I think in property are finding the deals and finding the money. If you can get good at those 2 things, your life will be a lot easier. Almost everything else outside of that is you can pay someone for. And to put everyone at ease to some degree, the first few deals are the hardest because you may not even have that confidence yourself, and we actually lack that. When we bought our first site, we thought the investor was the holy grail, and without them nothing happens. But in reality, we also bring something to the table, which we've now learned, and we've actually turned investors away where we go, we actually don't think this is the right fit. Normally it's when they're too pernickety and getting hung up on small details that you don't think are relative.
I think values have to match, right?
100%.
Ultimately, as you said, things can go wrong in projects. They can get delayed. COVID can happen, and it has happened.
Yeah.
And if that investor is not of the mindset where they can stick with you and support you in that time of challenging time.
Yeah, I completely agree. So communication and trust are the two most formal things that you need to really get on board with investors, and you don't have to be anyone else other than yourself, and just communicate.
Be authentic, right? Is the main.
Real. And some of our investors, sometimes we're too real. We just go, that, we cocked up there, and this is the result. But at the end of the day, it is what it is.
And I think they appreciate that, because the honesty, as you said, is not in other property developers in the sort of industry. As we know, there are a lot of sharks out there, and people have lost money. And maybe not on intention, but it has happened a lot. And
Yeah, I think it's all about how they handle themselves. So we've got quite a few investors that have invested with other people before us. And they just sort of say, it's nice knowing where we're at, nice knowing how you check in. We have a very formal reporting process, then we have a very informal reporting process. We kind of do both. And our goal is, I always say to any investors, we get paid at the end. So it's just in our interest to do it ourselves. And it costs us a lot of money to deliver sites. So we always say to investors, look, we're focusing on the 10th deal with you. We want to make sure this is a lasting relationship. And we put all the efforts to build and foster that trust, so that they can just leave you to it and go, you know what, I trust you explicitly. We actually, to give you an example, the first larger deal that we did with just one investor was the site in Spencer's with 7 offices and 7 flats. And I said the investor was always quizzing and asking why we would make certain decisions. Now he doesn't even need to know that we've made a decision, or even need to know that to be informed, because he just explicitly trusts us. And I think building that working relationship is really key.
So that 7-1 you just mentioned, I think isn't that the deal you won the award for?
Yes, yeah.
Do you want to tell us a little bit about it?
Yeah, I mean, we call that deal the Ugly Duckling, because it pretty much had a bit of everything in that deal. So it was industrial and office building that had some flats, 4 flats on site already. We got planning consent to extend both the buildings, convert the rear industrial building to 7 offices, and then convert the front office into 3 apartments. There was asset management, there was commercial leases, there was residential leases, there was commercial conversion, there was resi conversion, there was new build, there was business rates. There was literally everything. So it was a good one to cut our teeth on because there's a lot that we had to learn on that particular project. And essentially, yeah, we just added so much value in loads of different ways. We phased that site too. So we tackled the office first with an office fit out company while we started on the resi. And it was quite enjoyable to build that relationship with the investor as well. And it's fully tenanted. We sold the 3 flats to sort of pay the investor back their capital. And now it just rent rolls from the 7 offices and the 4 flats.
So the 7 offices, is that just what, smaller offices like on leases?
Yeah,
or-
so they're all small offices. They're about £1,000 a month each. So they're fully internal repairing, and then we take responsibility of the building.
All right. Okay. So seems to be a very popular strategy now, right? This commercial to commercial, where people
Yeah.
are looking at not necessarily just offices to resi, but offices to
Offices.
smaller offices,
Yeah.
right? Is that something that you guys are looking at and exploring in 2025?
Yeah, so the office market is off the back of COVID. There's a new form of working, right? People are hybrid working, and that means people can sort of stagger teams coming in or whatever it may be. So whereas a company of 100 people might need 100 desks, now they could probably get away with 50
Yeah.
and do part home working. So office requirements are less, which means office values have gone down. I also believe that because build costs have gone up, professional fees have gone up, and finance costs have gone up, land value for commercial conversions to resi has come down because the land value's got to be cheaper to warrant that margin change. So what is now happening is some office spaces are worth more as an office than they are as a development site. So what people are comically doing is picking them up at that lower value and going, actually, if we fill this and tenant it, it would value up better on a yield perspective as an office. So that's why a lot of people are moving into that space. I'm not a massive fan of tenanting offices because the concern is you might have voids and then you haven't got the income. And in those 7 offices, for an example, if 2 are vacant, we're breaking even on the mortgage. So whereas residential is a necessity, people have to live in homes. So I like that element of residential property. But when you sort of do a mixed approach, you can kind of counterbalance the risk in both parts. So we've got 7 flats and 7 offices.
Yeah.
So what we do is we look at a site and we go, what suits this site best? What is the best outcome for this site? And that's what we then go and action. We don't necessarily have a fit criteria of what we do. We look at any project. To give you an example, we bought an old NHS clinic in Reading. When I viewed the property, there was about 60 people viewing it. Only 10 of them were developers to knock it down and build flats. The other 50 were people that wanted to occupy it as commercial leases. And I saw the demand there for, back in those days, it was D1 use. This was probably about 8-9 years ago. So all I did was ask the agent for all of the viewing listings of the other 50 people that came, bought the property. By the time I'd completed, I had a 10-year full repairing lease with a children's nursery. They did their own fit out and it added about 150 grand's worth of value on the property. So we're not fixated on a specific strategy. We look at demand, obviously the monetary returns, planning as a consideration. Is there an easier way to achieve a margin without having to go to things that are out of your control, like planning or certain licensing? And that's how we look at every site. So we're creative in that way. We think the value is created uniquely on every site.
That's quite unique, actually, if you think about it, because generally property developers tend to have a niche. Either they'll just do new builds and they're really good at it and they just want to get better at it. And, that's what they do. Or commercial to residential or commercial to HMOs seems to be the theme as well nowadays. But because you've done all these different strategies, like you've just talked about, you can then very quickly work out, how you can de-risk the project or you can add value in multiple ways. Maybe, as I said, part commercial to commercial, part commercial to resi. So it's kind of really quite, in fact, in its own way, it's quite unique in that way, I think.
Yeah, so our deal analysis when we're pulling together an offer for a project is what can we get in for and not have any risk of planning or whatever it may be to buy the site and get out and make a profit. We then duplicate that tab, maybe even half a dozen times. One's part mixed use, one's part resi, one's part commercial, one's knock it down and build a new build, and then we let the spreadsheet tell us what's best.
Yeah.
Because we are led by profits in our business and also returns for the investors. They're two key things, and when we're buying from we're numbers driven, and not necessarily aesthetic driven at the outset, and then obviously we're trying to make the best of the project as it lasts.
Right. So that was obviously the money. In terms of deals, because obviously you've got this constant pressure to feed this ecosystem that you've just created now. How do you firstly go around finding these deals, and do you have like another system in place, and is that something that you personally do, or Ben, or how does it all work?
Yeah, so we have a massive emphasis in our business. We love divide and conquering and leaning into your own skills. If we're a football team, stick to your skill sets. For centre back or up front, stick to what you're best at. And my skill set being, trade background. I love sales. I love negotiating. I love building a process. Is definitely acquisition. So I basically in XP Property do the finding, the funding, and the structure. So it's my job to go out there and find the deals. And we, when you're going out and looking for development deals, you can either go on market or direct to vendor off market and be lettering, fields, corner plots, whatever it may be. But we wanted to get going. We didn't want to wait someone 3 years to try and convince them to sell something that they didn't expect.
And direct to vendor is that, isn't it? This takes too long.
So we just did on market deals, and we've actually bought over 90 sites since we set up the businesses. So we've done a lot of deals. Some of those have been direct to vendor, but the majority of those have been on market deals. So I'm looking at, literally where anyone else could see them. There is an element of, I always ascertain how well it's marketed, because then if something is marketed with a really good agent on Rightmove, or a really, maybe a residential agent but is commercial property, that might not be as well marketed. So there is an element of finding, through the weeds what the better deals are. But the actual success that we've had is purely in our process, which is we view sites. The speed in which you discount deals that don't work enables more time to look at the deals that should work. So for me, the biggest focus is not get sort of eager-eyed for the deal, because a lot of people go, oh, that's a fantastic deal, and spend weeks on it and then don't win the bid. We're very ruthless with our time and very efficient at getting to the point where it's a yes or a no within 5 minutes. And to do that enables us to spend more time on the more complicated sites, or the sites that we do think work. Once we get an offer forward, it's then all about communicating and follow up. So most of our deals that we've secured have maybe already been sold and another buyer didn't perform, or we were outbid, and we've just kept tabs on that agent and said, look, we're here to perform. How's it getting on? Because 1 in 3 deals between offer accepted and exchange fall through. That 1/3 is the ones we're picking up.
So do you have different levels of analysis? You'll have a level 0 analysis thing where you quickly put the numbers in. Does it work? Does it not work? And move on to the next one? Or is that more like a fact packet thing? Or
Yeah. So one thing I do in my head when I'm let's say I see something pop up on Rightmove, I'm looking at pound per square foot in, pound per square foot out. That's an easy metric to go, actually, there may be margin in this. You then look at potential value enhancement. So beyond the footprint of the building, what else could be added on the upside? And then we have, like you say, we call it a draft analyzer. It used to be called like fag packet, but investors don't like it when you go, we've done a fag packet review. So we call it a draft review to warrant spending more time in a detailed review. And then once it's gone through a detailed review, that's when we leave our office and go and view it. I see a lot of people out there that go and view before they've run any numbers. And the problem with that is you're wasting half a day on something that might clearly not work. So we're very regiment, and when we leave the office, it's kind of already working on a spreadsheet.
Oh, so you've passed the draft, and then it's at the detail. It's kind of meets your detail as well, numbers, and then you go out and view.
Yeah, and then I suppose we're active. We've got over 1,000 offers to secure those almost 100 sites that we've delivered today. So we're super active as well.
And so you think majority of them come from on market sites?
Yeah, estate agents, commercial agents, online surveyors, like valuation surveyors or asset managers. Our own network has brought us deals, because we have we always try and sort of share what we do on social media, and we obviously go to events, and sometimes people bring us deals as well. Typically, if it's too big for them, in the sort of, I see us as quite a large size SME developer. So yeah, typically just on market sites.
Amazing. So you've talked about deals, you've talked about money. In your own business itself, you said you mainly work on the HMO side of things as well. So let's talk about that now, because obviously you've got this renters' rights bill coming up and everyone's up in arms. We know that there's a lot of property in the market right now, and I think 1/3 of that is potentially from rented properties, and landlords are selling in numbers that they've never sold before.
Yeah.
Where do you see yourself in all of this? Are you worried about it? Do you see it as a threat? How are you going to overcome it in your HMO business? What are your sort of thoughts around this whole renters' rights and the compliance that's all coming through now?
Yeah, we're not massively concerned. So our HMO portfolio is in small towns in Oxfordshire. We let to young professionals, probably higher end HMO market. I feel that it's good to be in a HMO market at sort of the bottom or the top. The middle kind of gets squeezed. And essentially we do a really good product, and then we charge a premium for that. And we've found a bit of a niche because we operate in areas that no one else operates in, really, because they're small towns. We've got a HMO in Henley-on-Thames, for an example.
How many HMOs are there in Henley-on-Thames apart from Jacks?
Yeah. And the renters right, like what are the concerns with the renters right bill? Well, it's giving tenants more, I suppose, security.
Yeah.
That they're potentially limiting rent rises, but realistically, our rents haven't drastically changed that much since we set up the portfolio 8 years ago. So you naturally have a turn. A young professional that's 25 years old is not going to live in your property for 20 years. And also equally, the sort of rolling contract, we put a notification of 3 months if someone wants to leave, and if they leave, we'll backfill it again. So we're performing in areas where there's demand. We do quite a rigorous data-driven analysis on areas before we go there. So we're currently operating HMOs in 5 areas, and before we move to a new area, we run comparable data to prove demand. Is there enough activity in the market in the stock? So can we buy the stock? We also look at the returns. Obviously, is the room rates quantifiable against the cost per bed to get it bought and built? And we like our cute little portfolios that we sort of have them dotted in 5 locations now.
Right. And in terms of, so I think that's quite a unique perspective, I'd say, because a lot of people, it's quite different from what most people are thinking the tenants are going to stop paying. I mean, are you doing things like rent guarantee schemes and stuff like that going forward, you think, because you think you worry tenants might stop paying because they can?
Yeah, so we don't have any rent to rent. So renter guarantee has not really been something that we've massively been. We own most of our assets.
No, I meant so there's a new product, insurance. It's like an insurance thing where you can take out an insurance to say if the tenant doesn't pay, or you'll have maybe 4 or 5 reasons that they would pay up as an insurance company if the tenant stopped just paying.
Yeah, so I don't want to take it too stereotypical, but our tenant type is normally someone that's got a really well paid job. Most of our stock around, for an example, Oxfordshire is around science parks. Most people in medical or science. And we've bought a HMO before where we bought the home. It had 3 tenants in there, and they've been the worst tenants that we've ever had. And coincidentally, we've got over 150 rooms in our own portfolio, and we've not had that issue once. So it's all about vetting and pre-qualifying the tenant, because before they move in, you're in control. We also, because we're charging 900 quid a bed per month, we hold a good deposit of 900 quid. So they normally don't want to mess around. And we try and give them no reason to not pay. Realistically, if you can make sure that your service is good enough and you're responsive, you might get the odd difficult person, but realistically, we're normally able to resolve those within our portfolio, which is kind of why I feel that the middle of the market is where you want to avoid, because the people pay a premium for a product, and that tends to bring in a slightly different clientele.
Premium tenant as it were, right?
Yeah.
Right. Okay. So then you've got this HMO business which you and your brother. This is just your portfolio, is it? You and your brother.
Yeah. So, but myself and Rob, my brother, set that up. So I do all the acquisitions, the funding, and the delivery. He started to come more into the delivery. He just set up the letting side over the last 8 years and is now outsourcing that to the team. And he's now coming in to manage more projects. And we also, Ben and I might buy HMOs, and Central Suites will manage it and find it, project manage it, and deliver it. But XB becomes the investor and owns the asset. So Ben and I are also building a HMO portfolio. And then Central Suites also flips properties. So we buy houses and renovate them and sell them as well.
So in terms of your HMO strategy, is it just 6 rooms under PD, stay that way, or are you looking to do bigger HMOs? I mean, offices to HMOs is the rage right now.
Yeah.
Are you kind of looking at those sort of larger HMO schemes?
So the majority of our portfolio is 6 beds and below. We normally run our numbers on 6 beds because when we don't need external planning consent, there's no Article 4 in the directions that we operate in. So we can convert the property from C3 to C4 under permitted development rights. So it's easy.
And not,
Um,
exactly, no Article 4.
If we've then run the numbers and we're happy with 6 beds, but we can get a 7th or an 8th or a 9th, we will go, we will push the boundaries and go for planning, but it's not a necessity. So there are some instances where we've done that, but the majority of our stock is sort of 5-6 beds. So we do the standalone HMO like that. In XP, when we started the business and we kept that, some of our blocks of developments that we've kept and locked in on really cheap mortgages, it's now more difficult for buy-to-lets and blocks of flats to yield. So that's why we're selling a lot of our stuff in XP. But out of the 70 units that we're delivering, I think we've got something like 50 HMO bedrooms within the developments. So
Right.
it's kind of like a development that's also got HMOs in it as well. So we keep some, sell some. Sell some to pay the investor back, and then we will co-own the HMOs with the investor or own them ourselves, depending on how the structure is. So we do them in XP property as well. And at the moment, so we've talked about 4 of the projects in XP. We've got a 5th project, which is a doctor surgery we're converting into 5 cluster flat HMOs, all under one roof. And that's another example of us. So that they're being converted into 5 apartments to create 14 lettable bedrooms. So it's basically like a monster HMO, but there's obviously 5 kitchens, all en suite.
Is it like
But
per floor or something?
no, it's 3 flats on the ground floor and then 2 flats above. But that's an in and out, quite a quick project that we're doing.
And so would you get separate valuations for each?
We can just do most of the stock that we do is just bricks and mortar valuation.
Oh, you don't do the commercial vals for the HMOs?
Sometimes we don't need it. So our HMO in Henley, it's bricks and mortar valuation is higher than the investment value.
Oh, wow, because obviously you're buying expense. So do you end up buying the properties quite expensive, or because they're run down, you buy them cheaper?
Yeah, I mean, every property that we buy is normally, stinks and someone's been in there for 30 years smoking, or it's got structural problems, or, they're the ones we can take on quite well. For us, it's all about space. And I find that the best way we can buy properties is actually if they've got a compromised garden. So for an example, our HMO in Henley on Thames, it actually has a right-of-way footpath for the neighbouring 9 houses through the back of the garden. Now, a family with kids don't necessarily want to buy that, but you've got a 2,500 square foot house in the centre of Henley, so it's devalued. So we buy it, renovate it, split it into a nice HMO. Because they're all young professionals, they don't mind carrying the barbecue over the footpath and having a barbecue on the garden. And they're also quite social, so it being exposed isn't really an issue, and quite frankly, they don't really use the garden. So I find that that's a good way to buy discounted properties as well. We get pushed a lot of motivated selling properties. So, they're kind of like the We Buy Any House. We kind of have built a reputation because, we in Central Suites, we're 7 projects live at the moment. So we're really buying like 10 houses a year. When agents cotton on to that, they come to you when they can't sell something. They go, I know who will buy this. It can be quick. We've bought something in 10 days before, but that comes at a cost. And it's normally when someone's not money motivated, they're time motivated. And before going to, the We Buy Any House, because they think it's a con and it's online, they're dealing with being an agent, and then we get in and buy it.
Brilliant. So there's always this angle that, you have to find. So this is amazing property business that you built up. What's next for XP and this ecosystem of businesses? What's the target in 2025, presumably after you've delivered all the projects and everything else? What personally drives you to do all this? I mean, you're still in your early 30s, if I may say so. You're still very, very young. What's next for the next sort of short, medium, long term sort of
Yeah. So one thing we haven't touched on is we've also been building a social housing portfolio in South London,
right?
which is about 150 self-contained studio flats, which we've built, which is tenanted by a registered housing association.
So was it like a new build? Or?
No, they're all conversions. So old care homes, old HMOs, houses. We've converted them to like.
Oh, so they're dotted around, not 150 in one place. It's just dotted around.
Yeah, no, that would be a very big site. It's split across about 14, 15 assets. So we've had a bit of a go at social housing as well. So when I talk about the HMO market, and the top and the bottom, that's where we've covered off the bottom in that. I kind of feel that we've carved our way down. We've got a really good team and we've got a really good process, and we want to continue developing development sites to sell and sort of blending in a bit of HMO within the developments if we can, because they're high cash flow. They support the business. One of our goals is to get the business to a point, our development business, where our rent roll covers our overheads, so we don't have to develop, we don't have to feed the machine. So we're working on that at the moment, and by sort of this time next year, we should be covering our complete overheads of running our business.
Through the retained properties, basically, assets, your assets, yeah.
Through the income. We're going to do very much more of the same. We've got 3 deals in legals. One's due to complete this week, which is a bank. We're converting to, I think, about 6 flats. Some are HMOs, retail on the ground floor because it's on a high street. We've got a land deal, 17-unit land deal. And then
Subject to planning?
it's consented.
Oh.
And then we've also got an apartment scheme in central London that's in legals too. So we're going to do much more of the same. We're also, going to be sort of sprinkling I feel our business model now is like kind of a bit of development, conversion, new build, and maybe a bit of HMO on the side. And what you've got to remember is Central Suites also benefits from the management fees that we bring in more assets. So as XP's portfolio grows, Central Suites' revenue grows. So yeah, much more of the same. We've been banned by wives and our team for opening up more businesses. Like I've got a list of a couple of other businesses that I would like to set up. But it's all about making sure that we take our businesses from good to great, and making sure, we have a limited amount of time, and making sure that we can focus on what we've got going. So XP will try and continue to deliver about 20 to 40 million at any given time in delivering construction. Central Suites will continue growing its portfolio. XP Surveys we would like to eventually take to a national business. We've got certain things in place in the business that makes it extremely scalable. Such as we're the only company in the UK where you can get an online quotation for a topographical or measured building survey. So therefore, there's 0 time spent for someone to quote, and that, if we have 1,000 quotes in a day, it doesn't change our output in terms of hiring and our team. And then we've also got some other ideas around the delivery of the survey on how we can be more efficient and quicker than our competitors as well. So we want to focus on growing and scaling that business. And then also trying to enjoy it. We've definitely hustled, it's running all of those companies, and saying I was on site earlier today, like the hustle doesn't stop. It's been 7 days a week for almost 10 years and long hours, and to try and bring more of the team into taking more responsibility, so that actually, because when you're doing so much, it's sometimes difficult to stop and enjoy it and look back or look at something and admire it, because you're always under pressure. You're always focusing on closing the next thing. And you definitely don't celebrate the wins. We never do. If Ben and I complete on a sale, it's just right next. Where's that money going in the next deal, whatever it may be. So trying to get a bit more of a balance, I think, is where we're kind of at.
Yes.
And Ben is a bit older than me, and he keeps reminding me that he wants to slow down a little bit, because we're kind of funny, because the harder I work, the harder he wants to work, and it does get a little bit competitive. So you both end up, absolutely killing it. But now it's to build a bit more balance.
I mean, it is the time, right? When you're younger, you can do all of this stuff. You don't have that family pressures. Like, I mean, of course, your partners and your wives and whatever will still give you that pressure, but you don't have children telling you, oh, I need to go to this, class or this, that, and the other. So you still have that space still where you can, grow and, as you said, get streamlining, systemizing. So I guess it'll come a point where you can just do what you really enjoy doing in the business, which is what would you say are the top 2 things that you really enjoy in the business, and what actually drives you to do more?
I get huge satisfaction actually from like growing the team, and I'm a massive advocate that if you teach a man how to fish, he can fish for the rest of his life. I love seeing growth in the team individually and as a group. So definitely being more the sort of port call and growing the team. I also still love deals. Like I love the structure and the negotiating piece is definitely where my skill set and I find my flow. And I would also say, giving back in the educational space. I love meeting people and learning what other people are doing, and also the sort of socializing around working with our investors, because we spend a lot of time dealing with our investors, and it's really important for us that not only do they know, like, and trust us, but we know, like, and trust them. So I would say, working with existing investors, deal finding, And then working on the businesses and the teams, it's the way that mine and Ben's mind works in, for example, HB surveys. You can make a small tweak that will have a big output, and that's really satisfying to see that change and growing something from scratch. The surveying business started from nothing, and now as we did a 50K month, which is something like 21 surveys in a month, which isn't the most we've done in a month, but it's satisfying to see that from nothing and grow it, and the team enjoying being part of the ecosystem and socializing outside of work. That's really where we're going.
I mean, it's amazing that everything around you is crumbling. Developers are falling by the wayside. Projects are going by the wayside, but you guys are like going from strength to strength, and it's amazing to see that from with you and Ben. So I think there's obviously some secret ingredient that you're taking that's making you do all that. But I know it's the hours and hours of hard work that's gone behind it, and it's just incredible. I think kind of underestimate when things do or actually are planned the way you've planned it and built with this ecosystem, then things can go from strength to strength. There's no reason why where the economy is in a bad way, and I know everything around you is negative, that you have to be following that same trend, isn't it? Because you are actually kind of bucking the trend, I'd say,
Yeah.
at this point in time.
Yeah, I mean, it's really tough. It's a tough industry to be in. And I read a stat the other day. It's something like 70% of developers don't make it past their 6th birthday, which is a huge amount. If you have a room of 10 developers, only 3 would still be running the long term. So it's not easy, and we've had a difficult market. I feel that we've managed to grow our business in a really difficult space. Most of the costs have gone up. Where we've managed to counterbalance that as we do fixed price contracts with JCTs with contractors. So we could set up a construction company tomorrow and have quite a high turnover.
Actually, you could, because you've got the experience in it.
Exactly, but we'd have to quadruple our staff overhead. The margins that you're earning in construction are very thin, and because we don't take that construction risk, we can then split our 5 sites with 5 different contractors who have 5 different P&Ls, 5 different teams, and it's sharing the risk across all 5 schemes, because you'll get schemes that don't go as well as you planned, or that did end up as you planned. But if you've got that diversification, it's imperative to have that diversification. It's all the developers that struggle is with one deal that will quash them. But if they had 4 or 5 deals that equaled the same amount, let's say you're doing one £10 million development, and you had 5 £2 million development ones, you could afford for 2 of them to probably go wrong. And it's about that diversification that we've always kept while we're growing.
Well, that's interesting. I didn't realize you've got the different projects of the different contractors, which is quite interesting, as you said. You don't want to be putting all your eggs in one basket.
Exactly. Yeah, we have contractors that would happily give them all the work, but if they then lose money on one job, they're going to try and make it on another job, and then you start to blur the lines with, it can really be a snowball, and equally to developers, construction businesses go bust, believe it or not. And I would hate to run a construction business. I think it's really, really hard work.
It's tough.
And thin margins. If we're trying to make 20% gross development, or 25% is actually our target internally on gross development, and they're making 10% on construction, they can have that. We want the bigger piece, and to de-risk it and offload that.
And I think also if you're giving contractors multiple projects, they get blasé about it. They get too complacent is the word, I think. And you want to keep them on their toes, right? Because you want them to think they're not going to just take it for granted.
We always tender. It keeps people honest. And they're in our HMO business, for an example, we've got a builder called Richard. He's probably done over 30 projects for us. We always get him to pull a price together and tender it. But he trusts me like his best mate. Like we've built such a working relationship. But again, we do split. Out of the 7 projects in Central Suites, he's only delivering 4 of those, with the other 3 are being built out by other contractors. So even when you have a really focused relationship, you still need to diversify that.
What I also like about your fact that you're not sort of looking at what everybody else is doing around you. You're just kind of very focused on your targets, your business, and you're growing it. And you're not, because as you know, and you go to enough networking events, everyone's kind of really worried about what's going to go on with the whole Labour government and all of that. Does that ever worry you about all the regulations, compliance that's coming in, costings are going up? Interest rates, for what it's worth, are still quite high, than what we were expecting to be at this stage in time. Do you ever let any of this worry you? Or
Yeah, I mean, it's the classic, like the cream rises to the top. I'm not saying we are the cream. We're trying to be the cream, but the better you become at something, and the more legislated or difficult it becomes, the easier it becomes for you because there's less competition. So and to touch on people, worried about the government, they were the same people that worried about Brexit, or they always find a worry a problem. But at the end of the day, you just got to crack on and make sure that the scheme works on its metrics and you de-risk it as best you can. But at the end of the day, you have to take an element of risk. And it's all about managing that risk is what we focus on. And some of our investors have said that they've never seen so much scrutiny from a borrower. So we just make sure that we're de-risking it for ourselves, I suppose, as well. But I mean, we'd rather deliver a scheme and break even than sit on our hands and do nothing. So that's why we continue to grow and continue to do projects in tough markets, and also ensure that there's multiple exits, which is, we're comfortable with the construction side of things. We normally conditionally offer or get PD before we bought it. So the risk is getting it delivered and then getting it exited. And if we can manage those two elements very well, we hopefully will, continue growing in the trajectory that we have been.
Brilliant. Well, listen, thank you so much for your time. You've been amazing, as always, and wish you very well. And thank you very much once again.
Thank you, Manny.
Hope you've enjoyed it as well.
Yeah, I loved it.
Thanks for sharing your story and your journey.
Thank you.
Please support, like, and follow me if you want to be in touch with all the property news in 2025 and beyond. Thank you.